day traders. I hope you had a wonderful weekend and got some rest. As usual, Mondays are busy days and we have lots to discuss. Starting with the fundamentals, we had several announcements released today. Stocks rose after Summers, who had been the leading candidate to replace Federal Reserve Chairman Ben Bernanke, withdrew his name from consideration. Summers was viewed as being more likely to rein in the government's massive stimuli program. The stimuli has helped companies by keeping interest rates low. The president is expected to nominate Ben Bernanke's successor as early as this month. The new frontrunner is Janet Yellen, the Fed's vice chair. Stocks were also helped by news that U.S. factory output rose 0.7% in August, the most in 8 months. Technically, the broad market began with a gap to the upside after surpassing the 50-day moving average last week. This is a bullish sign, and the key right now is to see if we can maintain the momentum. The next level to watch on the upside is the 1709 level, and if we pass that point, we're home clear. However, as the day progressed, a sell-off started across the board, ending the day near the low for most sectors, and giving an island reversal or a tail gap to the downside in the majority of ETFs and indexes that we monitor. Let's take a look at a few subsectors so we can determine where the strength and the weakness are coming from. If you recall, the tech stocks rallied ahead of the broad market, but right now it looks like NASDAQ may be losing steam. We're still strong, however, we saw an island reversal on the NASDAQ today. And these patterns are known based on what we saw in the gold market and the crude oil market to be short-term to intermediate-term reversal patterns. I wanted to alert you to that in the NASDAQ market. I also wanted to look at some subsectors, and I'm seeing the majority of the subsectors demonstrating either a tail gap or an island reversal, which is very similar to each other, and both signal a change in the trend. Take a look at the semiconductor sector, for example. It's giving us the same type of indication that we're seeing from the tech index. I wanted to look at a subsector that's not connected to the technology sector. This tells me that the reversal may be occurring in both the broad market and the NASDAQ market. As you can see, the retail sector also has a tail gap setup. For now, I'm expecting the upside in the stock market to be very limited as a result of this setup. Tomorrow, the clue is going to be if we take the low out. If we do, expect a good-sized sell-off across the board. The bond market rallied with a gap this morning based on the fundamentals that Summers won't be cutting the stimuli at a rapid pace. But as I've said many times before, markets tend to revert back to the trend. And it didn't take long for the bond market to figure out that regardless of who steps into the Fed chairman's position, the result will eventually be the same, and that's cutting the stimuli one way or another. We have a real tail gap setup, and if you don't trade bond futures, you can trade the ETF, which is ticker symbol USO. Simply place a sell stop a few ticks below today's low, and if filled, place a buy stop 15 cents above today's high. Also, since this is not a stock, the cancellation rule doesn't apply, meaning you can keep the order open till the end of the day tomorrow. I'm bearish on bonds long term and now short term as well, and we'll be taking this trade if it gets triggered tomorrow. During the last few weeks, the main focus was Syria and whether or not we're going to attack Syria. Now the sentiment is very different than a few weeks ago, and each day it looks less and less likely that a military strike is going to come our way. Oil is beginning to react to that. We do have one major issue. The triangle pattern that we're seeing is typically a continuation pattern, and the breakout is to the downside. We did have an island reversal which started this reversal, and these are fairly accurate short-term and intermediate patterns. Now the market is showing us that it's more likely going to go down than up, both on a fundamental level and on a technical level as well. Watch the 104 level as the next area of support. If we can break below the 104 level, I will officially call the crude oil market a reversal market and become bearish. But we're not there yet. Let's see what happens in the next few days. Meanwhile, avoid long positions in this market and all energy-related products to the upside. Let's discuss the currency market. The British pound has been rallying for several days straight, and I commented last week that we're approaching overbought levels. This week we began with a tail gap to the downside, and RSI is finally signaling overbought levels. This is very significant reversal because we have a technical pattern, indicators, and something else signaling that a reversal is here. Take a look at the US dollar and notice that we reversed from opening at the low to closing near the high price. This is very typical reaction when a reversal occurs in the currency markets and gives us further confirmation that there's a shift occurring as we speak. The key to watch for right now is if we rally above the high or sell below the low of the tail gaps that we witnessed today. This will determine if the tail gaps will in fact be triggered. When they occur across multiple financial markets, a short-term reversal tends to occur more often than not. What's interesting is all of this is occurring in line with the FOMC, which is starting in less than 48 hours. So we have to be prepared for unforeseeable events and strong volatility coming our way in the next few sessions, so be prepared. I will update you tomorrow morning and let you know if we triggered any of the tail gaps that we saw today. The setups in the actual subsectors should keep you busy till after tomorrow, and I will update you midday as usual. Have a great night, everyone.